Hello and good morning, folks. Welcome back to Almus Market Mornings, your daily dose of global financial update with me, Shikhar Garg. And just as one thinks geopolitics would be taking a breather, there's another event out front. Reports of missiles striking in Poland have been circulated. Now, folks, I'd like you all to focus on the kind of words being used on the update, as they say Russian made missiles stuck on the Poland border, but not necessarily fired by Russia, as the Russian defense was also found by far denying their influence. So, all said and done, the USD index, which was initially showing some sort of a risk of initially showing some bit of correction against the majors, was now showing a trigger of a risk of sentiment, sparing all the gains that the majors had against the dollar. On the domestic front, as we've been talking about the bilateral trades, the recent update shows that there has been 9 escrow accounts opened by far in our bid to facilitate these kind of bilateral trades. On the other hand, the trade deficit data was also released, which showed some softening of exports and imports, putting further questions on the kind of gloomy days that we've been talking about. So, JK, I'd like your update on this kind of reduced economic action, and what should we be expecting out of the geopolitics now?
Yes, yeah, just like you said, the tensions never seem to end between Russia and Ukraine. And pouring cold water on some of the recent optimistic reports of peace talks, actually. The killing of 2 people in missile attack in Poland, gave rise to fresh tensions. Ukraine accusing Russia of firing their missiles. But I think investigations, as confirmed by or as stated by Biden, actually contest the fact whether it was actually uh, fired from Russia or not. And actually, Russia has been accusing that Ukraine has themselves done it just to escalate tensions. So it is, while Ukraine has dismissed these allegations again. So this is actually, so I wouldn't say it's a big escalation in the war or something like that, but it just shows that we are far away from peace, and these things are going to be, on the cards going forward as well for some time. Although G20 apparently is discussing this issue very seriously, and something should come out of this meeting going forward. I think focus was on lots of economic data yesterday. First, it was Japanese GDP that came minus 1.2% versus plus 1.2 previously, and this was a shocker. But again, there's little that the Japanese central bank can do, because they are already following easy policy. They cannot cut rates or ease the policy further. Only thing they can look forward to is the fiscal package that the Japanese government is, implementing in the days to come. On the European side, we had again, uh, market forecast being beaten on the ZEW economic sentiment survey, which was another addition to the strong and positive data that is coming out of Europe of late. Of course, European officials are giving mixed signals about rate hikes going forward. But let's remember that while there is easing of inflation in the US, in Europe so far, there are no signs as yet that it is happening. And there is still a risk that ECB falls short of having a control on the inflation, and the risk of a recession in Europe is very real going forward. Then there was the employment report from UK, which was rate being worse than expected, and although the claimant account was lower, which was good, but wages rose again. So employment was lower than new employment was lower than expected. So kind of mixed report, and doesn't change the expectation of BOE hiking by another 0.5% in the coming meeting in December. But all eyes will be on Hunt when he presents the budget tomorrow. And market has been well prepared, or rather, the UK people have been well prepared to expect more taxation and lesser, uh, money with them for spending. So that's why even in UK, long-term recession is very much on the cards. From US, there was more sobering news on inflation, with the PPI coming at 8% on a year-on-year basis in October, from 8.4% in September. Even the core PPI, which strips out volatile factors, was more placid, and prices stagnated in the month, coming down at 6.7%, its lowest since August last year. So it bolsters the hopes that pipeline inflation pressures have peaked. Mainly, uh, you know, even more good part about this is it may be indication of global supply chains easing. So it's an evidence that inflation may have peaked, more evidence that inflation may have peaked in US, and supports Fed members' calls for slower pace of tightening to meet the 2% inflation. The US retail sales, which is the next big number that's likely to be announced today, is look forward to by the market, just to assess how the consumers are behaving. Consensus forecast is for a 1% increase versus a flat figure last month. But there are some advanced indicators like the numerator sales report, and also the US Census monthly retail and food services sales report. These are projecting actually rise of 3.9% on a month-on-month basis, and 10.8% on a year-on-year basis, and the massive increase these numbers are showing. But there is some rider to it, that they don't account for price changes. So we will see how this number comes about, but definitely Fed is also watching how the consumer is behaving as far as the US economy is concerned. On the yield front, there wasn't much of an movement, but they have stayed lower because the PPI inflation was lower, and also geopolitical issues were again coming to the fore. Currency side, the positive vibes from equities fueled an ease in the US inflationary pressures, weighed on the positive vibe from equities fueled by an ease in the US inflationary pressures, weighed on the USD. PPI obviously being the trigger. In fact, the positive sentiment started very much in Asia itself, as the Chinese and the Hong Kong markets rallied 2% and 4% respectively, with the recent developments of the property sector reforms, support to the property sector, as well as the easing of COVID norms. Apart from the easing of tensions between the US and China, with Xi and Biden talking on the sidelines of G20, the currencies rallied further after PPI, but the Poland news led to profit taking in the dollar. Obviously, after the big moves that we have seen recently. On the rupee side, yes, it's been big swings that we have seen in the last few days. Obviously, 80-50 triggered a lot of buying on Monday, but also at 81.50, after a move of more than 1% in one day, the sellers were attracted, and we had some good flows going through the market. But again, trade data was a dampener. We have again trade deficit coming at 26.9%, more than what it was last month, and it remains a big hindrance for rupee making any substantial gains. So how we find, even after accounting for the services exports, which is positive, a positive balance, we still have even the net exports of net balance of services and merchandise being in the higher negative. So it remains a challenge for the rupee. Short term, we might see some flows because they have been held up for quite some time due to the rupee weakening trend. But medium term, it remains a challenge for the rupee. It's very difficult to see rupee sustaining any moves below 80 for the time being. Thank you.
Okay, JK, that was quite good. And yes, folks, across the globe, we are finding good updates on the fact that there has been some slowdown or reduced action on the macroeconomic front, with the Japan's GDP shrinking in the last quarter being the latest update. We are expecting UK budget update tomorrow by Hunt, and you can always expect the kind of stress we've seen over the period with this budget update in the past few months. So a long drawn recession, as JK mentioned, can be on card for UK. But on the domestic front, if we have to talk about, yes, there have been big swings in our own domestic currency against the dollar. So there's a lot of necessity for risk management. But overall, the macros, as JK mentioned, do keep the challenge for rupee to strengthen much further below 80. So folks, there has been some good updates, there has been some bad updates. Let's see how things go about. But all said and done, geopolitics does not seem to rest. So let's see how things go about in geopolitics as well. That's it for today. We shall come back again tomorrow with another round of updates. Thank you so much for listening.